Hallison Arrington's worried about the recent surge in COVID-19 cases in his hometown, Houston. So he's trying to get tested, but so are hundreds of others.
You know, this is my third day trying to get the test, so now I'm just now making it into the parking lot. I was in line today at 4:30 this morning, and I was still like down and around the corner. So yeah, I had to actually wait till the line started moving at 9 o'clock. So everybody's aware of how critical the situation is. That's why they're coming to get tested.
The outbreak isn't limited to one city. It's engulfing many states, especially in the southern parts of the country. On Wednesday, a record 38,115 people tested positive for the virus in the US. Texas has this week seen daily new infections rise to their highest number since the disease began spreading in the country, as have Florida, South Carolina, and Oklahoma. The Lone Star State is also among 7 states where hospitalizations due to the disease have hit a record high. US President Donald Trump says the number of cases is rising because they're doing more testing. But the rate of new cases shot up by 30%, while the number of tests has only risen by 7%.
You'll see from this chart, just in the last few days, those numbers have increased some 69% to 7,149 individuals, over 7,000 individuals, a record number here in the state of California that have tested positive for COVID-19.
New York, New Jersey, and Connecticut are trying to avert another spike, so they've mandated 2 weeks of quarantine for travelers arriving from the worst affected states.
The simple reason that we worked very hard to get the viral transmission rate down. We don't want to see it go up because a lot of people come into this region and they could literally bring the infection with them.
Such travel restrictions and business closures will likely worsen economic conditions at a time when unemployment is already high and rising. Last week, 1.48 million people filed for unemployment benefits. That takes the tally of jobless workers to 47 million since the lockdowns began in mid-March, with the country's unemployment rate at 13.3% in May. The International Monetary Fund has downgraded its outlook for the country's economy.
So for the US, we have a significant downgrade for 2020. We have growth now projected at -8%. The biggest hit is going to be in the second quarter, and after that we expect to see recoveries.
But even that projection doesn't account for the latest spike in COVID-19 cases. And unless its spread is slowed soon, the virus could have an even more devastating impact on the US economy. Mobin Nasir, TRT World.
Well, for more on this, Santosh Rao joins us now from Princeton, New Jersey. He's the head of research at Manhattan Venture Partners. Welcome back to the program, Santosh. Now,
thank you.
Almost half of the new coronavirus cases across the US are centered on 3 states, Florida, Texas, and California. The governor of Texas has even announced that it's halting the reopening of its economy because of the surge in his state. This is obviously worsening the health crisis, but could it also derail the economic recovery in the US?
Yeah, absolutely. I think it will definitely slow down, that's for sure. We're seeing that. The progress towards reopening was going well, we thought, but this was a total surprise, and the pace at which it's growing is also surprising. But there's a combination of events. So kind of maybe a little bit of negligence on the people's part. In New York, New Jersey, and Connecticut, we saw this whole thing come so badly. So we took a lot of precautions, the governments did. And so we controlled it. But the other states were very, I could say overconfident, I guess. I guess they didn't realize that it could come there as well. So there's a little bit of catching up there to the communities that did not have this. So that's what's going on. But hotspots are there. That's what's causing this whole thing. So I think that's what you're going to see. It's going to be more targeted treatment to kind of control that and get it under control. So I think there'll be a lot of combination of events, but on a very high level, it's definitely not a positive development for the economy.
Now, you mentioned the other states that have been controlling this pandemic, including New York, New Jersey, where you are, and Connecticut. Now, the governors of those three states say they'll be imposing a 14-day quarantine on arrivals from states with high infection rates. Is this what's needed to protect residents in those states that were once coronavirus hotspots, but also in order to protect the economies there as well?
Yeah, you're going to see that. I think you need a combination of something very severe like New York, New Jersey, and Connecticut are doing, because we went through a lot. This whole area, the tri-state, went through a lot. We saw the worst part of this whole virus, so we don't want the resurgence of that. So I think you will see a combination of the things. Maybe areas will be secluded. So it's going to be a very hybrid approach. The country is not going to be shut down. The president has made it very clear, and no one wants the country to shut down. But you will see extreme measures like this. And some areas in Texas, from what I read, have been shut down pretty much. And they have to be preemptive, proactive, and get it under control. So you're going to see things like what New York, New Jersey, Connecticut did, where you just quarantine for 14 days, 1 month if needed, but depending on the intensity. But definitely it's needed.
Let's look at the latest jobless figures now. So the Labor Department says another 1.48 million Americans filed for unemployment last week. It's another slight decline, but the number is still historically high. We know the US jobs market has been ravaged since mid-March because of this pandemic. Do you think this surge in new infections in some parts of America threatens to do even more damage to the jobs market?
Yeah, it is, definitely has the potential. Hopefully it won't get to that point. There has been a lot of fiscal stimulus to kind of sustain this hit for all the unemployed people and the companies that have been affected. So, but all that runs out in July, August. So you'll see the worst impact around September, October, if things don't come under control. So yes, I mean, the trajectory of this whole thing is definitely heading towards that, where you're going to see a lot more unemployment. A lot of companies may not come back on. A lot of stores may not open up again. So there's so many scenarios at this point, too many moving parts. No one knows what the other side is going to look like at this point, but things don't look very optimistic looking at today's data and today's whole events going on. Hopefully things will come back. Hopefully we'll get a therapeutic. Somehow people will be more cautious, start wearing masks, take the precautions, things like that. I think there's a little bit of that to be done. There's some negligence on that part. So if everything comes together and people realize that this can be very, very severe, I think we can come back to a semblance of normality, not fully normal, but at least get back to a functional state.
Wall Street, meanwhile, has been unusually bullish throughout this bad news surrounding the coronavirus in the US. We've had examples of record highs for some stocks and even for some indices. At what point will investors perhaps catch up to the bad news and let the bad news sink in?
Yeah, see the combination of events going on there as well. I mean, Wall Street looks ahead. You always the market prices discounts the future. So the market is expecting the economy to bounce back, if not in the third quarter, definitely in the fourth quarter. Plus, it's an election year, so you will see a lot of fiscal stimuluses and all that to kind of keep the things going. So those things are keeping the market up. But overall, I think the market is discounting that. But if it's much more severe and very drastic, of course, you're going to see things pull back. But at this point, the cloud companies and stay-at-home companies that are benefiting from stay-at-home situation, I think those are really driving this whole thing up, like the Microsofts and the Apples and other stuff. So, so you will see a combination of things, but at this point, the market is discounting the future, where it expects things to bounce back in the fourth quarter at least.
Okay, Santosh Rao from Manhattan Venture Partners, thank you for your analysis as always.